And so those days are gone forever. Also, these algorithmic stable coins gone forever. 60 billion erased. It was decentralized, so it wasn't just in the US, but all the idiot managers are gone, and that's a great thing. And I would argue that the industry is much stronger for it with the idiots gone. And if you don't own this, here's a problem you've got. There's two risks in the market. There's the risk of owning crypto, but there's also the risk of not owning it. There's a reason Jamie Dimon is going nuts on Capitol Hill. He knows that when he is taken into competition with something like a stable coin, the fees he makes on transferring capital on his ACH transfers and his SWIFT transfers between countries and geographies, he's going to get killed.
Shark Tank star and entrepreneur Kevin O'Leary isn't giving up on crypto. Although the businessman was one of the many people who invested in the now bankrupt FTX crypto exchange, he still thinks digital currency is the best way to protect your cash. FTX has filed for bankruptcy last week after millions of funds vanished from the firm shortly after founder and CEO Sam Bankman-Fried resigned. Shark Tank star Kevin O'Leary has spoken up about his investments in FTX after the firm filed for Chapter 11 bankruptcy. O'Leary has an equity stake in the cryptocurrency exchange and has signed a multi-year deal to become its ambassador and spokesperson. He also asked for his compensation to be paid in crypto and managed on the FTX platform. When asked about his reaction to the implosion of FTX, he told CNBC, "Obviously, one of frustration, there's no question about it. I am disappointed like many shareholders." However, he stressed that he is still a huge advocate for the potential of blockchains and cryptocurrencies. The company's collapse rattled trust across the cryptocurrency sector, and O'Leary, a native Canadian, has started moving his assets elsewhere. Canada is the only country that offers fully regulated broker-dealer exchange accounts, he said. In his view, unregulated exchanges aren't safe, regardless of their size, so he's turned to crypto exchange WonderFi, which is regulated by the Ontario Securities Exchange. He's a shareholder in the parent company, and it was also the first crypto trading platform on the Toronto Stock Exchange. "We have confidence that the regulatory environment in Canada scrutinizes accounts that can't be commingled," O'Leary said. "I can't find another place on Earth right now safer than Canada." O'Leary also seems to have turned to Bitcoin as the only asset he believed is very safe and where institutional investors will be willing to invest in. Before we listen to him, we want to thank you for watching our videos. It means the world to us. Thank you very much.
Whatever value is now held in JP Morgan stock will get transferred to something like a Circle. So if you don't own any Circle, you're going to miss out on that transfer. That's why crypto will become the 12th sector, the S&P. That's the risk of not owning it. The number one issue around crypto right now is policy. Number two issue, policy. Number three issue, policy. And I'll tell you why I say that. I represent and I'm very close to the indexing markets. I do indexes for sovereign wealth, pension, hedge funds, universities, endowments, all that. Let's say you're a very oil wealthy emirate in the United Arab Emirates and you make 250 million US dollars a day. That's not uncommon. Where do you put it? You put it into the S&P, X oil stocks, X airlines, because you already own those. And so indexers like me make those indices. When I talk to those people about what they're going to do in crypto, they would love to index 1 to 3%. I ask them, well, what would you want in that? They say, we'll just do Bitcoin. It's so correlated to all projects. We'll just do 1 to 3% in Bitcoin. They don't own any yet. None. Zero. For all the excitement about crypto, the real money, where 70% of the world's wealth is tied up in sovereign wealth and pension plans, owns zero crypto. If they could get their hands on it, they would buy Bitcoin, which is why it's so interesting. The Canadians have an ETF where the underlying is Bitcoin. They also have an ETF where the underlying is Ethereum. But the institutions won't buy it because their compliance departments do not allow them to own it because there's no policy in the US. So my whole investment thesis here is you go long Bitcoin and you wait, because you either have to do it after this policy, in which case you probably leaves 20 to 30% price appreciation on the table, or you go in now and you simply wait. But I'm telling you, you're not going to get past 22,000. It's going to be stuck in this range for quite a while until we get policy. The crypto market right now is really interesting, and here's why. This is one of the first years where everybody that trades crypto knows they're going to have to report. Let's say you're trading domestically in the US. You're going to have to report your gains or losses. And let's say you're like me and you have a lot of positions on. you've got 32 plus positions. Many of them are way underwater, but I don't want to give up my exposure to crypto. So what's going on my trading desk in our operating company right now is we're looking at every single project we're involved in. We're looking at the loss we could harvest. In other words, if I'm down 70% in helium or something, maybe I take that position, go back to USDC, then trade it into Bitcoin for the next 31 days, because that's the wash period, or 60 days, depending whatever your wash period is based on what your institution compliance says, or you individually have to comply to. Because if you're going to do that, you're going to get the tax loss benefit harvested in 2022 and still keep on a position in crypto. Now, here's the debate, because I just before we got on together was talking to my operating trading desk about this. There's an intrinsic assumption right now that Bitcoin is a good proxy for any crypto. It's really hard to see some project moving north of Bitcoin gains if Bitcoin is going to be stuck in a trading range of 19 to 22,000. Now, the assumption I'm making, and I'm giving you a lot of detail here because it's food for thought for everybody that's trying to make this decision over the next 6 weeks. If you're going to harvest your losses, you basically have to December 15th because things could get thin after that. I'm talking US domestic now. I'm looking at these positions every day and saying, okay, let's take off that Polygon position, or let's trade that Polygon position for the next month into Bitcoin and go through the tax period and then reposition at a new price, a new ACB average cost base, because this is the first year that everybody's worried about the IRS. The IRS didn't give a damn about this 2 years ago. Now they do. Even my own auditors, even our compliance department is saying, Kevin, what are we doing with our crypto portfolios? What's the plan? Let's go through every single position and harvest our tax losses. Now, I don't think Bitcoin is going to trade past $22,000 until we get policy, but it doesn't have to be Bitcoin policy. It has to be any policy, which gets full circle back to what I was talking about with the Stablecoin Transparency Act. Give me that policy. I want to be long Bitcoin when that hits, if it gets cleared into law, and Katie bar the doors, because institutions are going to smell the same thing. And the asset that they want, if you could pick, let's say, 4 positions, I'll tell you what they would be in my view from an institutional client. It would be Bitcoin, it would be Ethereum, it would be Polygon, and USDC as a payment system. You could get full exposure to the volatility of crypto with just those 4 positions, with the stability of your payment system being USDC. And I think that's what's going to happen. You're going to see a rise in those positions almost immediately. It doesn't mean Solana's not good. It doesn't mean there's other projects you shouldn't own. But if you want just a core holding into legislation, I'd recommend those 4.
O'Leary said he doesn't think the market has seen the bottom of the FTX fallout yet, marking a stark reversal from 2.5 years ago, when FTX's management team approached him to arrange a 30-minute meeting with Bankman-Fried. That turned into a 3-hour lunch. O'Leary then met Bankman-Fried's parents, both lawyers, and gained more confidence from seeing other large global investors backing FTX. Mr. Wonderful tweeted about FTX Saturday. As an investor, you will never get it right every time. You will make some mistakes, sometimes big ones like FTX. The key is to learn from them so you don't repeat. Over time, experience will get you to a place where you make more good investments than bad. The Shark Tank star previously explained how bottoms are made in any market, including equities, debt, real estate, and crypto. You always need a big player to go to zero. It always gives you a good bottom when you get a large player over-leveraged that goes to zero, and that always tends to be the beginning of the rebuilding process, he detailed in July. Someone is out there on the brink of zero. That's okay. In fact, I would argue that's a good thing. He emphasized at the time. What do you make of today's video? Please let us know your opinion in the comment section. Thanks for watching.